Now, can annuity really pay income for life? Let's get right into it. Okay, so the core question is, what if I live longer than expected? A very valid question, especially in today's society, advancements in medical technology. Yes, we understand that the average age and life expectancy is pretty much stuck, but there are people living until 90, 95, even up to 100. Okay, well, what happens if I live longer than expected? Will my income run out? Are they going to pay me till 70, 75, 80, or 90? Can I actually depend on it, right? These are very valid comfortable questions that we do get a lot from our clients. Now, how does lifetime income actually work? Okay, how is income for life actually possible, right? We hear stories of Social Security diminishing, that program not being there for us. But remember, that's the US government. Okay, we're doing business with private companies, A-rated companies. They're offering guarantees, highly regulated, and the payments are actually based on actuary math, right? They look at your age, they look at how much money you have. They come up with an actual formula. Based on that formula, that's how much income you're going to get for life. Some companies offer a inflation rider, a cost of living adjustment. Each company is different, but the fundamentals are the same with the companies. Now, the risk is pulled across many people. Okay, it's not just one company absorbing all the risk, it's several companies, several different clients. This is why they understand their numbers. They look at interest rates, they look at the tables, and then they come up with a lifetime income amount for you. Now, insurance company does guarantee the payments. You are signing a legal agreement or partnership or a contract with the company. They're going to tell you, look, we're going to get you A at age 65 or 70 or 75 or 80. Whenever you decide to turn on your income for life, that's that guaranteed number that they're going to give you. But what affects lifetime income? What other factors are calculated within that payment? Well, the first one's going to be when the income actually starts. Okay, if you start income on the younger side, well, that means that the company has to pay you for a lot more years and a lot more payments. So your payment's not going to be as high, right? So think of it like Social Security. The longer you wait, the higher your lifetime income will be. Also, if you're married, you're thinking, well, I want my partner to get income as well. We could structure where it's a single life on a joint life. When it's a joint life, both parties get paid depending on their life, but understand since it's on both parties, the payment's not going to be as high as single life. This is where we customize and tailor it based on what you're looking for. Everyone is different, and understand which company that you're doing business with. Lifetime income is quite popular, especially in today's environment with the baby boomer generation are retiring. People want guarantees. They don't want to rely on the government only. They want to predictability. So each company offers different numbers, different rates of returns, different options, different contracts. So make sure that you work with us and we'll find you that company that works best for you. Okay. Everyone is different. What your cousin may have, what your parents may have, or what your friend may have, their situation is different than yours. Okay. We really look at your finances and find a company that works best for you specifically. But why does this matter? Why do investors even choose lifetime income? Why not simply leave the money in the stock market? Why not do a CD account? Well, the biggest one, look, it removes the longevity risk, right? There's people that understand that, wait a minute, my parents are still alive. They're 90, 95. The genetics of my family, we don't pass away 80, 85. I feel like I'm going to live till 90, 95, if not 100. Well, this removes the risk because you're signing an agreement with the company. They're agreeing that they're going to give you a lifetime paycheck for the rest of your life. That gives you that peace of mind. Okay. How about also creates confidence in spending? Working with retirees, we look at their portfolio, but one thing that they don't like is, well, what if the market goes down that year and all of a sudden your account's at 600,000 and it drops down to 500,000 or 450,000? You get a little nervous about spending money waiting for that account to go back up. What clients love about their income retirement paycheck is they know for certainty they're going to get X amount of dollars every month, every quarter, every year. So it does help when it comes to financial planning and confidence on, take that vacation that you deserve, right? If you know you're getting Social Security plus a retirement paycheck through your income rider, it does make you much more understanding of, what, I could take that cruise. I could go to Europe. I could go to Latin America. I know for certainty that I'm going to have 30, 40, 50, whatever that number is coming in guaranteed for retirement. And it also supports long-term planning. Okay, we don't have to do the what ifs. We don't have to hope the market stays up. We don't have to play the bond market. We don't have to see what CD rates are at the banking system. We don't have to play that game of seeing your account go down in value. Yes, we look at the 4% withdrawal rule, Monte Carlo simulations, but there's emotional to the numbers, right? It's not only the numbers where the emotion comes in. So this really helps with the emotional aspect because you get that predictability. Okay, so the big takeaway is really about certainty. Okay, my clients that have income riders, they love it. They know that paycheck's coming in every year. They know what to expect. It gets rid of those what ifs, as I mentioned before. Also, your trading flexibility for predictability. Big trade-off as a pre-retiree and retiree is look, you worked hard your whole life. You invested and saved money. The last thing you want is to see your money go down 10%, 50%, 20%, right? We're in different times. The good old 80-20, 40-60 asset allocation mix, Monte Carlo, those days, don't seem to be fitting modern times, right? A lot of people are looking at predictability versus flexibility. And it's one tool, as I mentioned before, let's manage that risk. If you have those genetics, a great question I like to ask clients is, do you feel like you're going to live too long, or do you feel like you're going to pass away prematurely? Great question to ask yourself, right? And be honest with that question, because if you know your family genetics and everyone's living to 85, 90, odds are pretty good that you'll live there too. Of course, there's lifestyle choices, but it's a pretty good measurement. If you feel like you're going to pass away prematurely, maybe an income rider is not for you. It's not for everybody. That's okay. We could look at a typical index annuity. But a question that people do ask is, what does happen if I pass away prematurely? It actually has a death benefit. Okay, so you don't have to worry about any money being lost. That whoever the beneficiary is will receive the value of the account. Okay, so if you have additional questions, I put together this free educational guide, Smart Growth and Safe Returns, really understanding how affluent investors use index annuities to protect their assets and grow at the same time. Request it below. It's free. It's right in the description. But more importantly, I appreciate you watching and connecting today. Thanks for watching. If you found this helpful, hit that subscribe button today. And if you're ready to take the next steps, feel free to schedule a discovery meeting with Core Financial Partners. Until next time, take care and keep building smart.